Hello and welcome to the Upgrade the World podcast. I'm your host Josh, and in this episode I'll be talking about the fourth Bitcoin halving. The Bitcoin halving is a pre-programmed event that happens after the mining of every 210,000 blocks, or about every 4 years, where the mining rewards are halved, effectively halving the issuance of new Bitcoin as well. A key feature of Bitcoin's monetary policy, the halving events were implemented to ensure Bitcoin's scarcity, control the inflation rate, and increase Bitcoin's value over time. Current estimates show the fourth halving will take place on April 20th, in 15 days, when the Bitcoin network reaches a block height of 840,000. The fourth halving event will decrease the block reward from 6.25 Bitcoin to 3.125 Bitcoin, dropping the Bitcoin issuance from 900 Bitcoin per day to just 450 Bitcoin per day. Historically, the Bitcoin price has seen significant increases within months to a year after each of the three halvings that already occurred. For example, before the first halving in 2012, the Bitcoin price was $12.35, but a year later it was $964. Prior to the second halving in 2016, the Bitcoin price was $663, and a year later the price was $2,500. And before the third halving in 2020, the price was $8,500, and the price reached $69,000 over the following several months. These historical trends indicate that the halving has played a role in price appreciation over the long term. However, factors such as overall Bitcoin demand, market sentiment, investor speculation, and external events, specifically significant macroeconomic events, can also be attributed to the price increase post-halving. In 2012, the year of the first halving, the European sovereign debt crisis and the financial crisis in Cyprus drew attention to Bitcoin as an alternative store of value during economic turmoil, contributing to an increase in the Bitcoin price. In 2016, the year of the second halving, the initial coin offering boom brought over $5.6 billion into altcoins with an indirect benefit to Bitcoin, and the price surged from $650 to $20,000 by December of 2017. And in 2020, the year of the third halving, the measures taken to stimulate the economy in response to the COVID-19 pandemic caused investors seeking to find a hedge against inflation to buy Bitcoin, pushing the price from $8,600 to $68,000 by November 2021. The halving serves as a reminder of Bitcoin's scarcity and increases media attention, and when combined with these coincidental macroeconomic catalysts, the Bitcoin price increases as a result following the halving. When we look at the fourth halving, the biggest change in the Bitcoin market has been the approval of the spot Bitcoin ETFs by the U.S. Securities and Exchange Commission. Since the launch of the ETFs in January of this year, spot Bitcoin ETF demand has outpaced the supply of new Bitcoin created each day. The spot Bitcoin ETFs have been estimated to be buying between 3,500 to 4,300 Bitcoin a day, or about quadruple the amount of new Bitcoin supply created each day. The decrease in issuance from 900 Bitcoin per day to 450 Bitcoin per day due to the halving will make the 4x demand become a 8x demand. Basic economics says an increase in demand and reduced supply should lead the price of Bitcoin to increase. However, that is a bit of an oversimplification when you consider that sellers can make up for the reduced supply. While about 85% of the roughly 20 million Bitcoin that have been mined to date are in the wallets of long-term holders, some of these holders may sell at least a portion of their holdings for profit if the Bitcoin price appreciates significantly. Short-term holders likely to take profits if the price increases hold around 3 million Bitcoin. Miners control about 2 million Bitcoin and may be forced to sell some of their Bitcoin to cover their operational costs, since their block rewards will be cut in half following the halving. Throw in that this is a unique halving, where for the first time a new all-time high was reached prior to the date of the halving. Possible rate cuts by the Fed that could lead to increased liquidity flowing into Bitcoin, spot Bitcoin ETFs that will continue to attract more buyers to the Bitcoin market, and an ever-changing global macro landscape, and it is impossible to know exactly what is going to happen. So we'll just have to watch it all play out. That's all for this episode. Thanks for listening, and until next time, keep upgrading.